On the show now, we're being joined by Ashi Anand, founder and CEO at IME Capital, and also Arpit Beriwal, the manager derivatives at Motilal Oswal Financial Services. Thank you so much for joining us. And Ashi, let's come to you first. My colleague Prakash was just talking about the entire buzz in the defense space that could follow now that we have some exclusive details about the government's moves and plans in this sector. Give us a sense of what you are making of this sector, because a steep run-up followed by a cool-down period is what we've seen on this index. Where do you think Indian defense is headed going ahead?
So hi, firstly, thanks for having me on the show. Defense is very clearly a very interesting theme. Now, what makes defense so interesting is that there is a very, very large scope for value migration away from imports towards domestic manufacturing. India is the largest importer of arms globally, and it's probably one of the only areas where India leads globally in terms of overall spends. Now, this is because we've not really spent on building out our own domestic manufacturing base. And whenever there are conflicts, it is extremely important to have reliance, not to rely on global parties. So I think there is a clear impetus by the kind of government to increase domestic and manufacturing of defense. This is something that they have been working on over the last 2 or 3 years. And you have seen multiple kind of initiatives come in to actually push increase defense indigenization. Now, what makes this kind of theme very attractive is you can actually see very strong growth for the next 10, 15 years just coming in from import substitution on its own. You don't need defense spends on aggregate to actually grow very rapidly for domestic manufacturing of defense to actually grow, because you just have such a large import substitution market. Now, that said, when it comes to kind of playing defense, it is very important to kind of just understand some of the nuances of the space. Some of these projects tend to be extremely lumpy. The timelines can actually move around quite significantly. And valuations have actually also moved up quite considerably. Most defense companies have run up quite considerably over the last few years. So while growth is very, very attractive, I think it's important that investors look at this also bottom up, understand the kind of nuances that exist in each of the companies. So a company like HAL would be very dependent on a couple of projects doing well. Bharat Dynamics does have quite a decent margin volatility. Bharat Electronics may be a lot more diversified. You really need to understand what you want to play. But I think it is one of the more interesting structural kind of growth stories that exist in India today.
Right. Okay. Well, sources are indicating, and as per agencies, that Elon Musk Starlink has finally got its Key India license from the Telecom Ministry. We'll, of course, get more, details in on that. But I'm going to quickly get on board Arpit as well. Arpit, hi. What is it that you're making of not just the Nifty move, but what's happening within the entire rate-sensitive pack? Nifty Realty, banks, which already clocked an all-time high earlier this week, and then the way autos as well are perking up.
Very good afternoon to all. So as we see, this was the trigger that everyone was waiting for. And if you talk about the banking, reality and auto, all three indices were shaping up well. And if you talk about banking as a whole, so definitely banking is leading from the front, hit new life highs, and definitely going forward for next couple of weeks, we can expect good momentum towards 57,000, 58,000 levels positionally. However, looking at the banking space along with the reality pack is quite interesting. So if you talk about the reality pack as a whole, very sharp momentum we have seen, and within that also definitely 5 to 7% upside can be seen in the reality space, likes of Lodha, Opera Reality, Macrotech, and a lot. So overall, looking at the space wise, definitely the rate sensitive sectors are in good shape. And next couple of days to weeks time, definitely you can see good uptick going forward.
Well, equities as an asset class is doing well, but so is silver. It's been sizzling and it's already at an all-time high as of yesterday on the MCX on the back of renewed appetite for industrial metals and heated gold prices as well. But is there more leg to this rally? Kunal is here with the analysis.
I think for the first time, I think we can say that the white metal is actually outperforming the yellow metal. It's been a brilliant run for silver in the last few days. In rupee terms, yes, silver has crossed that 1 lakh mark and it's come back into lifetime high levels. On dollar terms, silver is still yet to make a life highs, but I think it's almost like a 13-year high for silver on the dollar terms. Now, this is a very interesting chart because for the first time, I think in the last 12 to 13 years, silver has managed to come back into a breakout mode. Why is this important? Because silver at current prices of 36 plus on dollar terms has managed to come back and break out of that major trend line resistance. Every single time, as you can see on the charts, every single time silver prices have managed to break past about the previous resistances, it's been met with a very strong set of momentum and a further move on the upside, which means that even this breakout which we're seeing right now for the silver charts, this should be met with a further round of optimism. The second chart is the most interesting one. We generally talk of gold-silver ratio. So, we looked at the charts for gold-silver ratio over the span of the last 30 to 40 years. And interestingly, there have been two earlier phases when the gold-silver ratio was at its major top. So, both of them are being marked by the arrow points where we can see that the gold ratio topped out, say, closer to 100 to 110 kind of a range. There were two, dates for this, 1990 and 2020. We'll look at individually what happened in those years and how, when the ratio topped out, you saw asset classes behaving. So, for example, we see, from 1990 to 1998, the span when the ratio corrected itself from being at an extreme overbought territory to, coming back into neutral territory, we saw silver prices moving 10x. So, almost 2x. So from 3.6, we saw the silver prices moving to 7.25. Gold in that time zone actually corrected from $360 to $288. Now, very similar kind of an outperforming move is what we saw for silver in 2020 onwards. Same ratio charts where silver moved from 12.25 to almost $28 and gold in that time span moved from 1500 to 1675. So gold underperformed silver in both those phases. This is the third time where we are seeing the ratio charts coming back into such kind of a deep overbought territories, which means very strong possibility that from here on to the next 1, 2, 3, 4, 5 years, we should be seeing silver as a strong outperforming class compared to gold.
Okay, so that's very interesting data points put together by Kunal on the rise of silver compared to how gold has performed in the year gone by. But let's also talk about, before we address more on gold and silver and how you should be favoring the metal, I just want to address some updates that we're getting in the telecom space that Aisha marked earlier as well. We understand from agencies that Elon Musk's Starlink has received a key license from India's telecom ministry. This is what we're understanding from agencies at present. Ashi, I want to get your sense on this new foray into the telecom space by a company that is not Indian. We already have a duopoly sort of a situation in the telecom space now. How does this foray change things for the Indian telecom sector?
So while obviously we do need to kind of watch this and see this kind of closely, at this point in time, it's not something that we believe should have too much of an impact. Starlink is going to be focused a lot more on kind of providing data. I think 4G, 5G networks are already fairly well entrenched. The bulk of, if you're looking at kind of data rates in India, they are amongst the kind of cheapest globally by a very wide margin. The ability of kind of Starlink to actually come in and disrupt is not very clear, right? So how a new player would be able to come in and break into this market, right? While obviously there is excitement about Starlink globally, and they can be kind of clear use cases in specific niche, especially industrial and certain kind of cases where intent penetration may not have reached. It's not really something that we see disrupting the kind of incumbents. We believe that there could be a place for Starlink to can come in as a niche player, but we honestly don't see it as having a big disruption on the existing telcos.
Right, okay, that's the take coming in on the entire telecom space. Just looking at the buzzers today, of course, Realty is the one which is really standing out. You had a note on, DLF as well earlier today, stating that the management has also highlighted that the company's focus now goes beyond just the headline sales growth. They're going to look at maintaining healthy margins and consequently cash flow generation as well. And that, of course, is coming in from one of the largest realty players in the country. That's DLF. For you, the blended portfolio margins, they're saying that they should trend around 40 to 45%, a combination of uber luxury projects that earn in excess of 60%, while the newer geographies earn a tad lower margins. So that's, the commentary coming in from the DLF management, and that's something that's gone down well with the street. Realty as a pack has been chugging along quite nicely off late, 6.5% off an uptick coming in on DLF as we speak right now, and a solid 4.5% move on the index. But there's also that fillip which is coming from the policy. In fact, we spoke with Niranjan Hiranandani on RBI's rate cut and how that's actually going to move perhaps better realty sales.
Housing where larger amount of loans are taken for a longer period of time and where the interest is reset based on a third party indication, like it has happened in the case of the Reserve Bank of India. It is compulsory for the banks to do so. So in reality, each and every customer who has taken a home loan from banks and financial institutions are going to be benefited, even those who have got past loans. So that's one thing. Second, it becomes an easier one for new purchasers who will find that their budget is fitting into the calculation on the new EMI calculation which is there. So the affordability in respect of home will increase. So that's the second benefit that really takes place.
Okay, so that's the word coming in from a real estate stalwart. That's Mr. Niranjan Hiranandani. But Arpit, I want to get your sense on this space because for the better part of the year so far, real estate has not done all that much. Q4 in terms of fundamentals also largely mixed. But on the technicals, does this recent run-up over the last fortnight or so seem like too much too soon? Or do you think this is sustainable going ahead as well?
We're talking reality index as a whole. From last couple of months, we've seen a good pullback from the lower levels. But if we see the bigger time structure, so some September series, we have seen a decent correction and almost stock corrected by 30 to 35%. But going forward, I think looking at the chart setup wise, definitely there would be few pockets that can outperform from here on also. So a couple of counters that are looking very promising on the chart would be Loda, that we still see that from next 2 to 3 months perspective, we can see good momentum, especially in top 3 counters as Loda. We can see good momentum towards 1800. 1900 plus levels. Second would be the DLF. As we already talked about DLF, the stock corrected from the higher levels, but good recovery was seen from the lower levels, and now the stock can head back to its 950,000 levels. And third would be the Oberoi Realty. So Oberoi Realty stock corrected really well from the high levels. So on the monthly scale, I think the base formation has been done, and slowly, steadily, the stock can head back towards 2100, 2200. So I think there is some more steam left in this space as a whole, and next 2 to 3 months would be quite exciting for this sector.
Okay, that's the take coming in on realty. But Arpit, would you have any BTST ideas that our viewers could pick on?
So as we're discussing about the reality, the first idea would be from the realty pack as a whole. That would be Oberoi Realty. So classical range breakout on the daily and the weekly scale. Strong momentum seen across the day, managed to close above its crucial hurdle zone, strong bullish candle. So Oberoi would be a first pick with keeping stop loss of 1830 for an upside move towards 2000. And second would be from the banking space, that is a private bank space, SGFC Bank. A classical range breakout on the weekly scale after 6 weeks, strong bullish candle at life high daily. So slowly we can see move towards 2050 to new life high. So this would be our 2 picks for the BTC trade.
Okay, so HDFC Bank and Oberoi Realty. So Arpit continues to be bullish on the realty space, and Oberoi Realty is his way of playing the space. But actually, coming to you, talk to us about Nifty Metal, because after a 9.5% move in realty on a week-to-date basis, you have Nifty Metal that comes second with a 2.5% uptick. But nonetheless, it's the second top sectoral gainer over the course of the week. Give us a sense of what you are making of this sector. Lots of news flow coming in from various parts of the world that could act as a potential overhang. So what's the view here?
So metals is actually a space that we would probably stay away from. Now, the main reason for this is it's important to understand that metal prices are the most important driver of earnings in these companies. And the metal prices are going to be driven by global demand and supply dynamics. With all the kind of uncertainty that we're currently seeing globally, right? With kind of Trump tariffs, uncertainty around the US economic outlook, China itself, which is a very important driver of metal demand globally, has not really been doing very well. It's quite difficult to actually create a case for a longer bull cycle in metal prices in a kind of overall environment where you are struggling to kind of see demand and growth. So I think metals could be has smaller, shorter trading plays, but just as a structural call, it's actually a place we'd stay well away from until such time as we either don't see much greater signs of a longer, more structural global demand recovery, or something quite significant happening in terms of the supply side and more in terms of supply side disruptions.
Right, okay. That's the take coming in right now on where seeing the market texture headed. But Kunal, what about your BTST ideas?
So I'll go with two buy calls. The first one is actually on L&T Finance, and after quite some time, the stock making a comeback was also one of the buy calls in the morning today. But would want to retrade a buy over here at current levels, even after 3%, 4% kind of an uptick today. Revised targets on the upside could be kept at closer to 198, stop loss trail to 184, and REC limited. And after almost like 3 or 4 weeks of a huge underperformance, the stock looks to be on a strong breakout mode, at least on the short-term charts, and this could potentially be a big turnaround point for REC Limited over the near to medium term. So would go for a contra buy over here, targets of 440, stop us at 406.